Good evening, everybody. Good evening. What's going on, everybody? Happy Valentine's Day. Happy Valentine's Day. We're going to keep this one a little bit quicker than normal. Let everybody free a little early this evening, but still going to provide some value for sure. Talk about a concept that definitely has been discussed a couple times in the past by myself, but figured I could just give it a dedicated lecture. But we'll get into that in just a little bit. How's everybody doing tonight? Oh, wow. We got Mike in here. Welcome in here, Mike. Welcome in. We got Nando. What's going on, my friend? Good evening. We're going to get the show on the road in just a bit. Just going to give everybody a little bit more time to hop in. Pretty good, Mike. Pretty good, dude. Good. Good. I kind of want to say it's good to see you back, but I'm just kind of waiting for some problems to start. So hopefully maybe you've changed, but maybe that's a too big of a Valentine's Day wish. But either way, good to see you, Mike. Good to see you. Happy Valentine's Day to you and Ashley. Wish I could be there with you. All right, Mike. Don't tell me you love me, man. That's
Tostie, Mike is a changed man, bro. We have to give him second. Well, isn't that the
yeah,
second chance, right?
yeah. He was a changed man when he was Reza and Equalizer and not Mike and Mike and my God of Weeble and God of Options. He's been a changed man.
T-Pain,
He's been a
T-Pain
changed.
now.
He's been a changed man every single time. So
Now
yeah,
it's
well,
uh now it's T-Pain. But listen, he got a new job now. I think he gets it going this time.
all right. Yeah, he. I
Benefit of the
guess
doubt.
we'll find out, man. I'll try and give Mike the benefit of the doubt. All
It's
right,
like
a couple minutes after the
it's
hour,
like
I'm gonna send out one message.
it's like the same way you believe in Rivian style. You have to believe in my guy, Mike. Give him a
Dude,
chance.
I got some belief in Rivian stock, that's for sure. And I have a feeling that earnings is gonna go terrible though. I just have a feeling that with my luck. All right, let me send this message. Comes up by
Yeah, about those earnings. Let me know what you do so I can
fade it.
load up the other side, of
All
course.
right, then short it.
And vice versa. Whenever I enter, without you enter and do the vice versa, because yeah, I hate the stock hates me. I
Yeah,
think it hates
well,
me more than I hate it.
yeah, when River enters something, we just got to do the opposite. And it seems like that's been a pretty solid strategy recently, huh?
Man, River scalp spy for like 15 cents. 15 cents move, and he's done
Yep.
for the day. I'm good off that.
I don't know how he does it. He's just so high. He just makes it happen. All right. Couple minutes after the hour, let's get this one going. Happy Valentine's Day, everybody. Not surprised we got a little bit of a thinner crowd. Probably a good thing. And hopefully the rest of you in here got something going on for Valentine's Day. And if not, I know Mike's looking for a Valentine. So you guys can feel free to reach out to him. Yes, this lecture is going to be recorded and uploaded just like every other lecture. Every single one is recorded, uploaded, and posted. That said, tonight the title of the lecture was small caps because MMA had to choose a topic for me because I was too late in responding to him this week and haven't gotten him an advanced schedule. But title of the lecture is talking about technical analysis on small caps. We're going to kind of stray away from that just ever so slightly and focus on a kind of more specific segment of technical analysis that is generally referred to as stage analysis. And what that refers to is really looking at the trend of a stock on the higher time frames and determining, like I'll call it, what stage it's in based on a combination of moving averages as well as price action. So it's a really cool technique. It's been wildly successful over the past year, and it's going to continue to do the exact same thing as stocks move out of these long-term bases that they've formed after 2021, 2022. We're going to continue to see these type of big bases develop and break out. So important topic to continue to cover. So going to focus on that this week. Yeah. Any questions on that? Or are we just ready to get right into it? All right. Well, no questions. Let's get it. All right. Let me open this image up more nicely really quick. All right. So this is a graphic that for those of you who have looked at my tab before, or maybe have never looked at my tab before, you're probably familiar generally with what we're looking at here. And this is kind of a nice example for, I'll call it stage analysis. So essentially, you can see kind of these different stages that are highlighted in different colors and a couple moving averages on the chart. I don't know what this gray one is, but this blue one is probably the 40 or 50 simple moving average. And generally, you should be performing stage analysis or really long-term trend analysis on the weekly time frames. And in general, the way to think about this concept is there's really four stages in the cycle of a stock, and they don't always fall in this order. So, it's not just going to be a stock that moves higher and then straight back down. It's not always the case. Sometimes we have a stage two transition into another stage one, right? We have a stage two base, kind of similar to SMCI. That said, I want to kind of walk through what each one of these stages represents, and then take a look at a couple examples on how that's played out, and a couple examples on some that are still kind of working on some more ideal buy points. That said, in general, the most important concept to be mindful of when thinking about stocks in the higher time frames is understanding where big money is accumulating and distributing their positions and why they are doing so. So the big idea is that smart money is always going to be buying positions at optimal locations, whether that's a good value, whether that's a good technical level, and they're also going to be unloading positions at optimal locations as well. That's just always how the smartest, most profitable institutions are going to operate, and ultimately those are going to have the best entries time and time again. And what we can do with stage analysis is look to determine where some of these larger firms and where some of these people with large amounts of money are investigating, or not investigating, where they are investing in specific companies. So let's talk through each stage. Starting with stage one, generally stage one is kind of regarded as some kind of long-term base. And this could be a period that lasts upwards of a year sometimes. And it's generally characterized by a period where the stock is really not moving anywhere. And it's also generally common to see high trading volumes when we're in a stage one base. So referring back to the chart here, DraftKings, really great example of this. And I think I actually have Snow highlighted. Yeah, I have Snow highlighted here with the same kind of similar colors here. Snow, great example of this one that recently made it out of the stage one base that I posted just a couple months ago, where you can see here on Snow, generally we can see stock prices pretty much flat. We're not really going anywhere. The moving averages on the weekly begin to flatten out. So this is the 50 moving average in orange, the 20 moving average in yellow. So moving averages begin to flatten out. We get the 20 weekly beginning to cross above the 50 weekly, indicating a potential change in trend, some higher lows as we move upwards in the base. And then finally, we have a decent amount of accumulation volume as we travel throughout the base. And you can see this is really almost a year and a half of time where essentially the stock went nowhere. In behavior such as this shows us that sellers have stopped distributing their positions. So you can see previously coming into the stage one base, we have rather aggressive selling. So a significant decline, almost a 70% decline in just a couple of months. And then over the next year or two, the stock really doesn't go anywhere. And just looking at that without any of those boxes on there, it's very clear from this point to this point that there is a difference here, right? Previously, we have an incredibly strong downtrend, right? The stock can't catch a bid for the life of it. And then all of a sudden, it just stops going lower, starts to set some higher lows and just stays in a range, right? It just completely decides it's no longer time to move lower. The significantly strong downtrend has stopped, and we started to begin basing. So this is again referred to as a stage one base. And generally, this is where you want to begin monitoring a stock. You don't necessarily want to be a buyer in the middle of a stage one base all the time, at least if you're looking to be an options trader, but rather you want to just monitor that stage one base and keep something like that on your watch list. You want to realize, okay, the stock has stopped moving lower, right? So maybe I'll mark out some important pivots that it creates. Maybe I'll end up looking at it at this point, and I'll just monitor these two pivots here, right? So it's set kind of this swing high here in this space, and it has these 52-week lows in this space. And I just kind of monitor the stock as it sits within these two levels. And again, stage one is really a time where we would be expecting institutions to be building up positions in shares. And if we look over the maximum amount of time available for this specific stock, Snow, the price really hasn't gone far in general outside of these couple rallies here. But for the most part, this stock has really sat in a $50 range for most of its life, which is pretty surprising. But it just goes to show there's no longer people interested in selling. So at that point, there has to be people who are beginning to accumulate positions. So that's really an example of a stage one base. Now, where option traders should begin to get most interested, and even long-term share investors, is when we begin to transition outside of stage one into stage two. And you can kind of see what that's looking like here. Lando says at the top. Yeah, right here is where we get real fired up. Yeah, that's right, at the top. That's where River buys. No, so that is not where we buy. So in general, right, where we want to start to be most, I'll call it curious about trading the stock, is when we start to see this transition from stage one into stage two. And you'll notice a kind of difference in movement here, especially on Snow, right? And the way that I have this drawn out is I have this little downtrend drawn here. In some ways, for us to know that we have moved out of the base is the following characteristics, right? We've set sequential higher lows while sitting in the base. Towards the right side of the base, we don't have any significant sell volume days. All of our above average days are buyers, and we have multiple weeks below average selling weeks, which is a good sign, right? So we're running out of people that are interested in selling, a lot more people interested in buying here. We also have our 20 weekly moving average crossed above the 50 weekly, prices moving above, and also those moving averages are beginning to start an uptrend, right? So two very notable pieces there. And at this point here, really right around here, is when you're seeing that first transition into stage two. And comparing that to our chart here, you can see rather similar behavior. Right before that transition into stage two, you get what might be referred to as a tight flag, where we see a couple weeks of just really no progress in price action, rather low volume. And to ignite that flag, we saw a significant group of buyers step in. And you can really see that that's exactly what happened here, right? I mean, clearing this up again, we had a significant amount of buyers pushing us up outside of the base, and a tight flag forming over some of the prior swing highs, right? A little bit of moves below, but in general, right? I mean, even if you draw a level all the way down to here, this area, right, this level of resistance, prices began to stabilize above this area, right? We're starting to find what I like to call acceptance above this previous level of resistance, which should be your first indication that price is transitioning into stage two, which stage two is a strong uptrend, right? Very strong uptrend. And the reason that this happens is now institutions have spent a year and a half accumulating the position that they're looking for. They have all the shares that they need. And at that point, they can begin to move the price higher. And you have to remember that institutions are always the ones in control of stock price. That's fundamentally the case in the market. The people with the most money are the ones that get to control where stocks go. And once they've accumulated their position, the stock price is able to begin moving higher. Their warehouses is full, and they have exactly what they want. They've accumulated their position. They know they've gotten it at a good value, and price can begin to move higher. Now, obviously, none of us work at those institutions. None of us are able to tell what's going on inside of them, but we can use the weekly time frame to determine what is going on with a stock. And we can determine that a stock is transitioning from, say, the stage one base into a stage two breakout, right? Which here, very clearly, you can see that breakout taking place. Multiple high volume weeks, right? Which is something that we haven't really seen at all throughout the space. We've seen a couple high volume weeks, but never any follow through. Like here, a couple high volume weeks and a big selling week. Here, a couple decent buy weeks and no higher high. Whereas here, we have multiple sequential big buying weeks. We set a higher high compared to this high. We pull back on pretty much no volume. We're also breaking a key level of resistance. We're sitting above the weekly 20 and weekly 50 moving average. And at this point right here is where you should be thinking as an option trader, it's probably time for me to get involved. So I'm just going to clean this up a little bit and remove these boxes, and let's zoom in what this looks like on the daily. A little bit messy here on the daily. There's no denying that. But if we throw up some of our 9 and 21 EMAs, very clear to tell what's going on here, right? I love using the EMAs for kind of a nice picture of short-term momentum. And it's pretty clear what's happening here. As we're moving out of the base, we're leaving behind unfilled bull gaps. Those gaps act as support, which means that any pullbacks are now opportunities to be buyers, right? We do leave behind some bear gaps. Those got filled, right? So here we left a bear gap that got filled. And seeing these gaps left open now on the daily chart is an indication of strength. And you can look on any stock, pretty much any name that's been strong recently. And these gaps on the daily have only precluded strength, right? Here, for example, gap on the daily that's left unfilled. Unfilled gap here, unfilled gap here. I mean, I guess you could call that a filled gap here. Regardless, right, there's a couple things that we've covered so far, right? First, it's identifying that stage one base on the larger timeframes, right? You need to understand what names have stabilized. And really the most important times to be considering this type of line of thinking is coming out of a bear market, right? So early 2023, late 22, right? We're starting to see some momentum coming off the lows from the 2022 bear. And we're waiting to see these stocks that have been sitting in these bases start to move out of them. So really important to have these kind of larger time frame focuses, putting these on a list and just monitoring them every week, right? Checking them, seeing, okay, have we moved out of the base? Have we not? Are we getting buyer volume? Are we moving outside of any key resistance levels? And ultimately, right, price should make it pretty simple for you, right? We've identified that price was moving out of the stage one base on the weekly, right around this time frame. We begin leaving behind these unfilled gaps on the daily. Let's say you don't catch it here and you don't catch it here, right? You miss the entries on both of these times, but we pull back right to this gap. EMA is still in an uptrend, 9 above the 21. Pull back to this gap again, hammer high or low, 9 above the 21 EMA once again. Even if you miss it here, you wait for us to break these swing highs. We pull back to this gap. It acts as support right at the moving averages. Again, we set another move higher. So multiple entries provided off of this breakout, right? I mean, there's so many ways you could enter this stock long after identifying this breakout on the weekly timeframes, right? You've identified on the weekly timeframes that institutions are buying this name up. You've identified the strength on the daily timeframes. You've identified that the trend is up, 9 above the 21, unfilled gaps on the daily, meaning bull strength. And finally, you can identify a large group of entries, right? You could easily enter above this swing high, long, easily enter there. You can easily enter on this bull gap when you see it acting as support on this day, right? Maybe because you're below trend, you wanted to wait till the next day. That's fine. You could easily enter here, pulling right back to that gap level for another day. And if you don't like that we didn't pull right back to that exact level, you could easily, again, see this strength creating another unfilled gap here, pulling right back to that same gap level, right into the moving averages. And even then, if you still are hesitant to enter, you can enter above these highs here, right? Break above these highs, hold above them, right? Here, another pivot, super valid entry. And taking a look at the hourly, what this looks like should be pretty clear, right? Initial low there, higher low, break above the entry, higher low, hold of the entry. Rather simple, right? The trend is completely valid on every time frame. We've identified the long-term breakout. Stage analysis makes it easy. So we have a question in the chat. How do you invalidate this trend in the long term using SMAs? Great question. Yeah, generally speaking, when you're doing stage analysis, there's two things that matter for a trend. Number one, you're looking for those weekly moving averages. So a commonly used weekly moving average is the 40 SMA. I personally prefer the 20 and the 50, which are not on the screen right now. The 20 and the 50 are my preference. So a longer term invalidation would be the 20 moving average moving back below the 50, or a lower high or a lower low, right? But at this point, and that's really two things, right? So it's price structure and it's longer term moving averages. But we've seen neither of those materialize in this specific trend, and only a strong trend higher and even another valid bull entry would probably be above these swing highs as soon as tomorrow. So that said, this is how to use stage analysis to identify where we are coming out of a base, right? Coming out of a long-term base. But if you remember, there's a lot more to it than just stage one and stage two, right? It's also important for us to not only identify when we're starting to see that weakness and trend develop, but also identify when we're able to see that continuation. And this is something that we've seen in a lot of names recently. SMCI, it's almost not even fair to really even say this one right now, but really clear, example here where we consolidate right into these weekly moving averages, nice flat base, bull flag, if you will, breakout on high volume, right? Igniting bar here on the weekly and continue to move higher. This example is kind of like cheating just because it's got the theme. It's just the right name at the right time. So you can't really call this one, a textbook just because it's got so much going for it. But even so, right, we could look at this with many other names, such as AMD, right? Same idea, right? The base looks slightly different here on the weekly. But again, we have this transition from stage 3 here, where we get this final kind of push higher in, oops, let me go to a new thing here. So we have the same idea here on AMD, where we get this transition from stage 3 into a stage 4 downtrend, right? We have the 20 weekly below the 50 weekly. We begin to form that base, right? The base looks a little bit different here. We set low, have our initial higher low. Probably could draw a probably could draw some kind of downtrend here. Might not be perfect, but that's a decent start, right? And even then, could draw a couple pivots to make sure we're actually making it out of this base. Maybe here, right? A couple weekly levels. And here we break out of the base, begin to hold above it, little double bottom at the 50 weekly moving average. Again, moving averages trend is positive, 20 over the 50, also over the 200. We have a full uptrend as of here. So we've made it out of that weekly stage 4 decline, beginning to move into a stage 2 uptrend, right? So not even really too long of a base here, but using these weekly simple moving averages can be so powerful in just giving you an idea of where the trend truly is, because all it really takes is, okay, the 20 is over the 50 is over the 200. Okay, we're in a full weekly uptrend. And this is also something that I shared recently in my tab, which was a back test that I ran. And I'll just kind of highlight that really quick. Give me 1 second. So I just want to highlight kind of the power of paying attention to these weekly moving averages, which is one thing that I did in the tab months ago, which is this study right here. And let me just, I guess, open this up here to make it a little bit more clear. So this was a back test that I ran back in March of 23. And essentially the criteria was entering when the weekly 20 SMA is greater than or crosses above the 50 SMA. And we only enter when the 20 is below the 50, or only exit when the 20 is below the 50 and the 20 is below the 200. So essentially we enter when we start to get a full bull trend, and we only exit when we have a full bear trend. And this back test alone has outperformed the SPY by about 400%, right? So SPY over a 30-year period has returned about 788%. This back test has returned a little over 1,100%. So it's done better than buying and holding, just as a result. Obviously proves the significance there. The only kind of downside of this study is it only has 4 positions. So, if you're a statistician, it would be potentially rather easy to say that this might not be statistically significant, but we do have a 5th condition now, which also has a very similar result. That said, it just proves the statistical significance of these weekly moves in the moving averages, right? This was months ago. Back in March, I made this post. Let's see if I could find the date. March 26, 2023, mentioning exactly what we are talking about today, where this yellow line is the weekly 20, orange line is the weekly 50. Same exact thing we're talking about right now. This was the first cross we got above. Right here, literally at this point in time, that chart was posted. And I mentioned this back test because it truly has a significant amount of power. Paying attention to the weekly trend and understanding where it is in that trend. Because at this point, SPY was actually starting to work on a stage 1 to stage 2 transition. It was breaking out of a stage 1 base as we're seeing this moving average crossover, right? You can maybe draw a trend, see us breaking over that trend. We take a look at kind of the most recent pivot in that base, 411 area. We started to make it above that 411, even came back down to retest that exact same spot while all the moving averages are in a full uptrend. So understanding the context of the weekly couldn't be really any more powerful. I mean, I think I've proven it on Snow, which is still kind of in progress. Now Spy kind of highlighted that continuation on NVIDIA there. And I want to take a quick, I guess, break to just address any questions and comments you guys might have. We have one question. Why do I prefer the 50 and 20? It's kind of less of a preference for me and more of just kind of a simple fact that those are just heavily used by other market participants is really the big idea. So yeah, that's really it. It's yeah. Do I run any backtests using any coding language, a Python, or use any application? Yeah, so that was actually on a TrendSpider a long time ago when we had like a TrendSpider subscription at the server, but we don't anymore. So I only used it once, to be honest, but that was really the main backtest I ran. In terms of Python, I'm actually trying to learn it, but I don't really have too much interest in running backtest outside of I guess the main purpose of me running that backtest was just kind of showing the significance to the server at the time of something I already knew mattered, and so many greats of trading would share the same sentiment. It was just kind of cool to see the data.
Wait, so Toasty, you've used TrendSpider before?
Yeah, I don't use that anymore.
I mean, it looks like a great platform. I've always wanted to transition from TradingView for some reason. I mean, TradingView is great for me, but never given me issues. TrendSpider looks like it has a shit ton of tools, though. Like, I mean, I'm not saying
Yeah,
I'm going to use every tool, but all right, charts look
it's
clean.
it's definitely cool. I I don't know. I just didn't think it was worth the price anymore. Um, but yeah.
I think that's what threw me off. The pricing comparison between TradingView and that. Maybe. Not so sure.
Sorry, I'm talking to River. I'm trying to prove River wrong about taxes. He's distracting me. All right. Yeah, Greg, that is a similar kind of I'll call it, yeah, it's a similar way to present this concept, which is accumulation, markup, distribution, markdown, which I think that's probably a Wyckoff. I believe that's Wyckoff terminology, if I remember correctly. Let me ask River; he would actually know that.
You're referring to the 50% tax?
All right. So yeah, anybody else have any questions on that so far? Is this generally making sense? Gerald Peters. I don't know who that is. I've never heard of him. Oh, it was from Wyckoff. God, we know our stuff, Nando. All right. So big purpose of this was to really start to kind of drill down the concept of paying attention to the higher time frames and understanding how significant such a simple technical, I guess, indicator really can prove to be. So this is all about the weekly time frames, and I want to just talk about a few more examples where the same concept has played out. DraftKings is a really good one, which I think I'll show you guys what this looked like months ago when I first posted this in my tab. Let's see if I could find it. Yeah. All right. So this is one of my favorite examples of stage analysis here from a long time ago. Oh, let's go back to it. So you can see, even at this time, I was still posting this exact same graphic. And if we take a look at this chart, this is DraftKings, right, on the weekly time frame. This was when it was still back at the 17 area. And you can notice the characteristics that it's showing here, right? We have this high volume as we travel throughout this base. We have the 20 weekly, again, 20 in yellow, 50 in orange, crossing above 20 crossing above the 50 here, indicating a trend reversal. And you can see exactly how that played out, right? That was during this week right here is when I posted that chart. And ever since then, the stock never looked back, right? So it just goes to show the significance of paying attention to these higher time frames and really looking to determine what's going on with the stock. Is now it's up 158% in a year, which is pretty significant, if you'd ask me. And that's one of my favorite examples that I've seen in recent times. Another really good one is Shop. Again, exact same idea where you get these high volume weeks down at the bottom. And again, if you zoom out, really the best way to know if a stock is forming a base is just by looking at the volume. And you can very clearly see on Shop here, right? There's very clearly very far above average volume during this period. And one important thing to note is that volume is always going to be the most important indication of money moving into or away from a stock. It's just something that institutions can't hide from, and it's always going to be available for us to be seen, right? They just can't hide the volume. And here, again, very obvious indication that something's going on in this area, right? Large amounts of transactions taking place here, yet the stock is essentially going nowhere, which just means that people are starting to accumulate positions. And again, we zoom in, same exact idea, right? 20 weekly crosses above the 50, right? Not too much movement here for a while, but still kind of just slowly grinding out throughout that base. And then really the best way that I like to trade it is just marking out some of the most significant pivots in the base, which is here 45 and here 54, and then trading off that based on the daily, right? So here, this first setup, pretty easy, right? You get a massive gap on earnings. The street got it way wrong. Obviously, generally going to be some kind of continuation in the coming days, whether it's after some more consolidation or soon after. So that makes sense. And again, another side of strength, we leave that unfilled gap behind. It's not one you're going to want to be short on. Eventually, though, character did change a little bit. We left this unfilled gap behind, which eventually filled, and then left a bear gap open behind, which began to act as resistance. Came back down to our big weekly pivot at 45, and it did the exact same thing, leaving a massive gap behind on an earnings report, consolidated, continued to move higher, leaving more and more gaps behind, just indicating strength. Finally started to fill some of those gaps lower. But this is the big idea, is really, again, I can't nail this down enough, which is zooming out, looking at the weekly time frame, paying attention to the trend, then trading based off those pivots that you got from the weekly and the structure that you can see on the daily. So, I mean, that's really the big idea. In terms of small caps, the reason that this lecture was kind of titled Small Caps is, generally speaking, there's going to be more small caps right now in bases than most other tech names, just because of the fact that, you know, tech names are far out of their bases at this point, right? Google, long gone. Apple, long gone as well. Microsoft, obviously, Meta, not even really ever in a base. So it's not always going to be perfect, right? We're not always going to be perfectly, you know, flat for a year and a half. You know, sometimes it's going to look a little bit more like this, where there is really no base. It's just kind of a final capitulation where price moves lower and just one day decides it's not going to go lower anymore, and we have to just trade based off of the daily or the lower time frames and focus on the pivots on the weekly at that point. So not always going to look perfect like the textbooks, but you can't really expect that. And let's see, Tesla's going to have a bear 2050 estimate crossover soon. Yeah, it's getting to that point. Yeah, I certainly agree with you. It's definitely looking vulnerable, right? You know, we've had that 20 over the 50 over the 200 for the past couple months, and now they're getting real close to the danger zone, right? We're getting that 20 and 50 and 200. They're right on top of each other. And a couple more weeks sitting in this range, and we might start to see some kind of trend reversal. And again, you got to remember, moving averages are lagging indicators. So just because the 20 crosses below the 50, it doesn't mean just go short or go long instantly. It's rather common to see some kind of test back into those moving averages. But yeah, very interesting point, especially considering the fact that the 200 weekly moving average is pretty much one of the most important levels on any chart. It's essentially when price moves below that 200 weekly, stuff starts to get freaky. Like, for example, the SPY, I remember this week, I remember me and River were trading some puts just because we started to lose that 200 weekly. You know, it gets real hairy when we get below there. And, you know, obviously in hindsight, we ended up holding that 200 weekly and never looked back. But you got to be cautious when price starts to play with that 200 weekly. Things start to get real hairy when we get below there. And even the Qs were able to hold up a bit. But most other names, right? Again, Meta, once you get below that 200 weekly, things don't get any better. So yeah, that's the big idea. That is the concept behind stage analysis. Mike has a couple questions. How do I have my chart that clear? Right click and clear drawing set. And does this play into the Bollinger Band strategy? I mean, your Bollinger Band strategy is not, last I heard, it was not a very good Bollinger Band strategy, Mike. Just because price does something at the Bollinger Band doesn't mean you instantly just go short or go long. That's not really how they work. So you got to have a bit more context than that. PLTR, yeah, reasonable example as well. Same idea, right? Obviously, long out away from this longer term base, right? But this is really the same idea, right? Marking out some of those weekly pivots, which let me go to a different set. Oh, Mike. Here, I'm going to refer you to River. He really knows your Bollinger Band strategy. No, Mike. I have no idea what your Bollinger Band strategy is, and yeah, last I heard, it wasn't a very good one. So unless that's changed, we can try and talk more and refine that a bit. But yeah, we'll talk more about that. Yeah, so PLTR, same idea, right? Again, very obvious what's happening here. All throughout this weekly base, the only above average days are buying, right? Only time we get above average volume. So let's clean this up. Only time we get above average volume is buyers on the weekly, right? That's a really positive sign to know that a stage one base is forming, right? Next, obviously, massive breakout through the space, high volume for 6 weeks straight. It's just not something you see very often. So at that point, I'd be marking out some of the pivots in the base right here, here, and here. And I'd look for those levels to begin acting as support on the daily. At this point, we've gotten a clear breakout of that base. We got the 20 moving average above the 50 on the weekly. So again, we can zoom down, drill into our daily here, and take a look at what's going on. We have those same unfilled gaps left behind, characteristic indication of strength. That's 1, 2. Those are technically filled. And same idea, right? I mean, I guess here we undercut that weekly base a little bit. So we kind of developed a new support right around here on the daily. Should probably draw that out like that. A little bit of maybe a pennant here, something like that. Get that breakout here on another earnings report, leaving a massive gap behind, another indication of strength. And then once again, another massive gap left behind following a positive earnings report. It's just continuing that strength that started on the weekly almost a year ago at this point. So, yeah, I mean, it looks great for more. I mean, this is pretty much a textbook setup, right? When you see a move on earnings like this, you don't go short, right? It's very clear. And one important thing to note that I think we could talk about really quick is that when you see a gap up like this on earnings, this means that Wall Street was dead wrong, right? They had their estimates, they had their expectations going into the report. They see the report and they were dead wrong and they were caught off guard. And when people are caught off guard, money begins to move very quickly. And you can see that happening in PLTR. You can see that happening in SMCI, right? The street got caught off guard. They didn't realize that they were so positioned incorrectly when they pre-released their guidance a couple days before the report, right? And ever since then, the strength hasn't stopped, right? Same with NVIDIA, right? Following this breakout, the street realized, oh, wait, this thing actually might be undervalued. We can keep this one moving higher. And, obviously now it's getting a little aggressive into this next report. But yeah, that's the big idea behind those power earning gap setups as well. Another important piece of understanding the strength of a daily trend. Any other questions? How y'all feeling about Coinbase with all the talk about BlackRock and Bitcoin? Yeah, I'm not super familiar with all that talk, to be honest. I'm honestly really pissed again. I missed the move again. I was looking at Riot. Literally, once I saw this move right here, I saw price closing back above the daily point of control, bull bar closing near its high on rising volume. I was like, all right, Riot looks ready. Then the very next day, it just gapped up and didn't come back at all. And I was like, well, it looks like I'm not going to get involved. And I just made the same mistake again, which is pretty frustrating, if I'm going to be honest. So I really should have just probably chased it, but didn't again. So unfortunate reality. So it's just a move that I've been kind of sitting out of. Mike, I will take you seriously. Yeah, DraftKings. Yeah, so same idea with DraftKings, right? Again, we have that very clear weekly base. You can mark out these pivots here, weekly range right there. Zooming in on the daily, we got that 20 above the 50 on the weekly. Zooming in on the daily, notice how we found some resistance at this level before. We get into break above, start to hold above, then we gap up off of that level, leave that gap behind, indication of strength. That gap begins to act as support, indication of strength. So it just goes to show we're starting to move out of that base. You can draw this kind of continued bullish momentum. We're setting higher lows the whole way up, no lower lows. A little bit of consolidation here, but yeah, I mean, DraftKings just another. I guess the only concerning thing on DraftKings would be these couple of days, right? Pretty large amounts of selling volume on these days, but no result from them. So something to note there. Yeah, and then Costco is another really interesting one. Costco is one really never went into any form of stage one base. It kind of just continued in stage two all throughout COVID. Really, the only notable piece, which you can see I have drawn here, is the fact that it just kind of did nothing and was flat here for a little while, right? And you can see that 20 came below the 50. So we're sitting in that base, nothing really to do there. And then finally, we start to get some more positive momentum. We get the most significant buy volume as we're moving to the right side of the base here. A little bit of a trend breakout there as well, right? And here, I'll just mark this candle here. That's when we get the 20 over the 50. So we know the trend is full bull at that point, which looking back at the chart here, you can see what's going on. You pull up some of the short-term moving averages, right? 9 and 21. Both of these EMAs remain positive all throughout this breakout. A little bit of downwards momentum here ultimately leads to just a reclaim and continuation of trend. And yeah, I mean, it's the same idea at pretty much every single one of these names. It's really all these patterns end up repeating themselves. Sometimes they look a little bit different. Sometimes they, move a little bit differently. Sometimes they fake themselves out a little bit more, a little bit less, but for the most part, it's all the same. All it is understanding the trend on the weekly. So understanding, are we in a base? Are we in a trend? Is the 20 over the 50? Moving down to the daily, looking if there's strength, looking if there's increases in buyer volume, seller volume, and trading based off of all that analysis. Any other questions? All right. Well, if there's nothing else, probably going to call it here for the evening. When does a strategy become the most reasonable? Always, Mike. This is something that always will work. Understanding where price is at on the weekly time frames and then trading based on those breakouts and those moves out of weekly basis are the most reliable, the most repeatable strategy that you can do. I would say in the entire market. I mean, it's something that people have been doing for probably 50 years. And this is not something that is a new concept. I mean, you could look back to charts from the 50s, stage analysis in the 70s. Let's see if I could find something. Stock market. See if I could find some old charts here. Let's see. What is this? I can't tell when this is. SPX. Let's see, what is this? Okay, well, this is back in 2012, same idea, right? This is back in 08, right? Same, stage one base. Let's see what else we got. Stage two, stage one base on Ford back in 09. These aren't as old as I would have hoped, but they're good enough. Yeah, that's the big idea. It's something that hasn't gone away. And yeah, I think this would be most valuable for swing trading, Mike, if you're looking to frame your trade based on the longer time frames. But understanding what the stock is doing on the higher time frames should absolutely be influencing your bias for how you're structuring day trades. Like for example, if the longer time frame is trending up and breaking out of a strong base higher, you probably shouldn't be looking to short. Or if you are looking to short, you should probably be very mindful that you're counter trend trading. You're welcome, Mike. Thanks for the good questions. Those are actually pretty good questions. You can send me a DM if you want more questions answered. All right, everybody. I'm gonna call it here for the evening. As always, appreciate you guys' time. Happy Valentine's Day to you all, and I will see you guys all in the next one, and see you on the trade floor tomorrow morning. Thanks again for your time, and see you all in the next week's lecture. Adios.